So as an inexperienced home buyer, it's so hard to tell what type of documents you're going to have to send your lender in order to get a pre-approval. Well, today I'm going to talk about the two most common types of income and what type of documents you need to have prepared when you go to get a pre-approval. So when talking to a mortgage lender and starting the pre-approval process, a big part of that is having documentation that you can send your lender so that they can review and determine what you get pre-approved for, what type of loan programs, and what type of qualification you have. So today I want to talk about the two most common types of income and what documentation is needed for each of those types. So the very first one is kind of your most standard W-2 employee. Okay, now a W-2 employee is someone who works for a company who gets regular pay stubs, and that company is taking the taxes and other deductions out of their pay. And these type of workers typically get a tax refund a lot of the times when they file their taxes. And so that's how you know what type of worker you are. So as a W-2 employee, there's really only a couple things that you need to have prepared when you talk to the lender. The first one is your W-2s. Most mortgage programs will require the last 2 years worth of W-2s. So if it's 2025, they're gonna ask for 2023 and 2024 W-2s. And if you worked at multiple companies during that time, the last 2 years, you're gonna have to provide all of those W-2s. And you wanna make that as complete as possible. The second thing is pay stubs. So you're gonna need to show pay stubs of the last 30 days so that the lender can calculate your income. Now, if you are paid on a base salary, it's going to be very simple to calculate that income, right? If you get paid on a base salary plus bonus income or any other type of incentive income, commissions, stuff like that. If you make that type of income, you may have to provide more than just the last 30 days worth of pay stubs so that the lender can properly calculate your income. Another piece of documentation that isn't really for you as the borrower to provide, but it's something that the lender does to calculate your income is called a verification of employment. This is commonly known as the VOE. This would be something that would be requested from your employer. An HR person or a payroll person can typically provide this that verifies all your income over the last 2 years. Now, if there's any other discrepancies or complexities to your income as a W-2 person, there might be additional documentation, but that's really the basics. W-2s, pay stubs, and a verification of employment, a VOE, is going to be required if you're that type of employer. The second most common type of income is called self-employed. So this seems a little self-explanatory, but all this is someone works for themselves as a business owner or an independent contractor, and they make money. They pay their taxes when the tax time comes, and they usually have to pay the IRS. So a self-employed person can make money in all different kinds of ways, right? It doesn't matter what type of business. You could be selling popsicles on the side of the road or have a super high level sales business. It doesn't matter because it's all deemed self-employed income to the mortgage underwriters. Now, the documentation required for a self-employed borrower is always going to be the same, and it can be more expansive. Now, the documentation required for a self-employed borrower is typically always going to start with the tax returns. So it doesn't matter how the income is earned, it eventually ends up on the tax return. Now, personal tax returns will list business income. Sometimes that business is only listed on personal tax returns. Sometimes that business may have separate tax returns that are called business tax returns that list out the income. Whatever situation that is for that particular business, the lender is going to want to see those tax returns. So if it's all in the personal, that's the only thing you would need to provide. If there are separate tax returns, like an 1120S for an S Corp or a 1065 for an LLC, they're going to be asking for those. But your personal tax returns, that's a Form 1040, and those are always going to be required. Businesses may be required. And so what the lender is looking for in those tax returns is how much net revenue did you earn, and then how many expenses did you write off from your income. So the more write-offs and the lower the net amount is, which is after write-offs, that amount is going to be crucially important. Some people make a lot of money in their business, but they have a lot of expenses too. And so that's not going to be great if you're trying to get a mortgage, because you want to show that you actually have a real income. Now, there are other complexities to the calculation, so that's not the end all be all, but it is very crucial that you're showing income on those tax returns. So the important thing to take away from this video is that it doesn't matter how you earn your income, you need to have these documents prepared and ready when you call the lender, and don't be surprised when they start asking for this type of documentation. Now, today we only talked about income documentation, but then there's also asset and credit documentation and other explanations that you're probably going to need to provide before you have a full pre-approval. But I wanted to make sure I explained how the income documentation works. Thank you so much for watching this video. Please like and subscribe, and reach out to me if you have any other questions about this subject.